Bitcoin has just crossed $64,000 in Asian morning hours on Monday the 17th of August, but do not mistake this for a strong breakout. It is up only 0.5% on the day and still down almost 3% over the past week. That gap between the headline number and the weekly trend is the real story. Hype, the token linked to the Hyperliquid trading platform, is the actual standout, up around 8% on the week, while Bitcoin, Ether, XRP and Solana all remain lower over 7 days. Today is not a broad crypto rally, it is a shallow bounce inside a longer pullback. So why is Bitcoin above 64,000 at all? The push is being driven mainly by macro conditions, not fresh crypto demand. A softer US dollar and fading expectations of further Federal Reserve rate hikes are giving risk assets a gentle tailwind. Every major coin gained on Sunday, but none of that was enough to erase the weekly losses. Traders are also positioning ahead of the FOMC minutes, the written record of the Fed's latest policy meeting, which should reveal how seriously officials discussed future policy. That is creating a wait-and-see mood, because minutes can shift rate expectations very quickly. Earlier in the week, Bitcoin broke below a trend line and tested support around 63,400 and 62,500, before recovering into the 63,000 to 64,000 range. For holders and short-term traders, this matters in two ways. First, Bitcoin is not confirming strength yet. A daily gain of 0.5% after losing almost 3% weekly says buyers are hesitant, not confident. Second, Hype's 8% outperformance suggests capital is rotating into smaller, higher-risk altcoins rather than pushing the whole market higher. That rotation often happens when traders want crypto exposure but do not fully trust Bitcoin's momentum. At the same time, XRP traders are betting on a rebound as the price slips towards $1, another sign that the market is hunting for value in beaten-down names. The mood is cautious optimism, not euphoria. For day traders, thin Asian liquidity means these levels can be tested again during London and New York hours. Looking ahead, the near-term direction hinges on the Federal Reserve minutes due later this week. If the minutes are read as dovish, meaning the Fed is less likely to raise rates, Bitcoin could hold above 64,000 and attract follow-through buying. If the minutes reveal hawkish concern about inflation, the softer dollar support could disappear quickly and drag Bitcoin back towards the 63,400 level that was already tested. Support at 62,500 is another line to watch, because a break below it would open the door to deeper losses. The key warning sign today is the weekly loss. Until Bitcoin closes a full week in positive territory, the broader trend remains under pressure. A calm Monday can easily become a volatile Tuesday if the minutes surprise. So the takeaway on Monday the 17th of August is simple. Bitcoin touching 64,000 is a psychologically important level, but it is not proof of a new bull trend. Hype may be jumping 8%, but Ether, XRP, Solana and Bitcoin are still lower over 7 days, and the FOMC minutes are a genuine catalyst that could cut both ways. Watch whether Bitcoin can hold 64,000 into the European Open, and do not confuse a relief bounce with a genuine trend change.